Most hold forever portfolios are built on past success, not a realistic look as to what comes next. That's why you find all the usual suspect stocks, Amazon, Google, Microsoft. You get the idea. But when we ran these big name stocks through our Zen Ratings quant model, the results were kind of poor. Remember, the Zen Ratings analyzes 115 separate factors proven to drive stock price performance, and these usual suspect stocks ranked in the bottom 60%. Instead, we want to load up our portfolios with the best stocks. That's why today I'm sharing 6 stocks that truly make the grade. That's because all of them rank in the top 13% of stocks or higher of the 4,600 that we track in our model. All in all, these are businesses that are durable enough to hold through the next recession, the next tech disruption, and or the next panic. By the way, I'm Steve Reitmeister, but all my friends call me Righty. I spent over a decade as editor-in-chief of Zacks.com, and now I'm a partner at WallStreetZen, where I helped develop the quant model I use to source the stocks in today's video. Quick ask before we start. If you like this video, then be sure to hit that like button. It helps me out a lot. Much appreciated. All right, before the stocks, a quick reminder. Risk is inherent to investing. Your investments are your decisions, so always do your due diligence before you put your good money to work. Okay, on to the stocks. Starting with stock number 1 in AbbVie, a symbol ABBV. There's a test that separates truly durable pharmaceutical companies from those that merely look durable on the surface. It's called the patent cliff. That is the date a blockbuster drug loses exclusivity and generics flood the market, pricing collapse, and the stock usually goes through a multi-year malaise. AbbVie went through exactly that with Humira, once the world's biggest selling drug. They came out the other side with a stronger business. That's because their 2 replacement drugs are now guiding to combine $31 billion in revenue for 2026, well ahead of forecast. Analysts are projecting earnings growth of nearly 3 times the rate of the broader drug manufacturing industry. This doesn't look like a company in recovery. It looks like a company that absorbed the hardest hit in pharma and still came out roaring ahead. When it comes to the Zen Ratings, the AbbVie scores a solid B grade, which means buy, because it ranks in the top 11% of all stocks we track. As we drill into the component grades, we can appreciate their unique strengths, which includes being the top 18% of all stocks for growth, plus top 13% for financials, and top 7% for safety. Now, the value rating may only be a C, but it's actually in the top 27% of all stocks in this category. One reason for that is the attractive modest forward PE of only 14. This also points to an attractive PEG ratio of just 0.92. So I would say value is another feather in its cap. AbbVie is also getting its share of Wall Street analysts' attention with a consensus strong buy recommendation. The highest analyst target price comes from Piper Sandler's David Amsellem, who ranks in the top 6% on the street in terms of his actual stock picking performance. His target price implies 40% upside potential in the year ahead. On top of all the goodness I just shared with you, you also get a dividend that is above 3%, with more than a decade of consecutive annual increases. To sum it up, AbbVie survived its toughest tests of the patent cliff and is now building on top of a stronger foundation than ever before. Now add in the sparkling fundamentals found in the Zen Ratings review, a strong Wall Street support, and a hearty dividend yield, and you have the makings of a great long-term investment. No doubt you will recognize stock number 2 in NVIDIA. You don't need me to tell you the ticker, right? NVIDIA designs the graphics processing units that have become the de facto standard for AI training and inference workloads. Their CUDA software ecosystem is why switching away from their hardware is practically impossible even when so many alternatives exist. The financial quality backs up this thesis. Return on capital employed is above 81%, nearly double the semiconductor industry average. Profit margins are above 55%, and revenue growth grew a whopping 65% last year. That is truly insane for a company of this size. Now, in addition to the solid numbers, analysts remain enthusiastic about the stock. The current average analyst price target implies upside potential of over 50% in the coming year, and some analysts believe NVIDIA could surge another 90% in the coming year as well. Now, let's talk about what the Zen Ratings has to say about the stock. Now, NVIDIA ranks in the top 9% of all stocks, leading to a B grade. However, recently it has been flirting with an upgrade into A territory. Note that our ratings are updated daily, so be sure to go to WallStreetZen.com to see the latest ratings on any of our quote pages. The financials component for NVIDIA ranks in the top 1% of all stocks we analyze. Now, this reflects a business generating exceptional returns on every dollar of capital deployed. Sentiment and our proprietary AI factor both grade NVIDIA with above average B ratings as well. Now, the weakest grade is a safety score of D. This reflects the extra volatility that comes with most semiconductor stocks. But for investors with a genuine multi-year time horizon, then it's hard not to appreciate the special case for NVIDIA, especially as they are clear winners of the AI revolution, and there's little reason to doubt that party is ending anytime soon. By the way, if you're not subscribed yet, then now is a good time to do so, plus hit that notification bell. Now, we publish data-driven analysis like this regularly, and subscribing with the bell means you don't miss any of my future videos. All right, let's get on to that next stock, talking about number 3 in TE connectivity with a symbol of TEL. Here's a company you probably haven't considered as a forever hold. TE Connectivity manufactures the connectors, sensors, and cables that go inside electric vehicles, aircraft, factory robots, medical devices, and yes, AI servers. Their products sit 2 layers behind the end product in most cases. That's not a weakness. That's the whole point of this investment thesis. Let me explain. When you're embedded that deep in critical infrastructure across so many industries, customers typically don't switch suppliers over a price disagreement. The switching costs are too high, the qualification process too long, and the risk of a failed connection in an aircraft or a medical device is too severe to even computate, right? That's real pricing power and compounds quietly over time. This proves out in their 83% earnings growth as we roll back the last 5 years. This has also allowed them to increase their dividend for more than a decade without interruption. This is the kind of business that tends to get overlooked precisely because it's not glamorous. There's no consumer brand, no viral content moment, just critical components deeply embedded across industries that aren't going anywhere. In fact, they're growing quite fast. As for analyst coverage, I'd say this is the one that's getting a pretty solid thumbs up from Wall Street. Several top analysts rate the stock as a strong buy, and that includes Guy Hardwick of Barclays, whose price target suggests over 40% upside potential in the coming year. When it comes down to the Zen Ratings, TE Connectivity gets another B rating overall and ranks in the top 13% of all stocks we track. Even better are the scores in these key areas. We're talking about top 8% for the AI timeliness rating, top 7% for safety, and top 6% for value. Rarely does value, safety, and timeliness go hand in hand, but when it does, it tells you something special about that stock. It should be quite appealing to long-term investors to consider buying now. Let's keep the party moving with stock number 4 in MYR Group with a symbol of MYRG. Okay. By the way, these next 3 videos, including MYR, give you the most serious long-term growth potential. In the case of MYR Group, they're quietly wiring the infrastructure behind nearly every major growth trend in the economy, and yes, that includes AI. Amazingly, almost no one is talking about this stock. Someone has to wire the buildings. That's the simplest summary of MYR Group's business. They're a specialty electrical contractor. Every megatrend generating headlines right now, AI infrastructure, grid modernization, clean energy, EV adoption, you name it, they all need electrical construction behind them. And MYR Group is one of the leading companies that shows up putting crews on the ground. The numbers behind that positioning are hard to argue with. That includes 311% earnings growth in the past year alone. Yeah, 311% growth. When it comes to the Zen Ratings, MYR Group scores an overall A rating, the top 3% of all stocks we track. It has broad fundamental appeal, but the real strength is the top 4% showing for growth, followed by the top 3% showing for financial strength. This combination often points to stocks more likely to produce future earnings beats that boost shares higher and higher in the future. Not only is MYR Group immersed in so many key growth trends, but the results are continually showing up in their quarterly reports. This is precisely the ingredients that should appeal to buy and hold investors. And now on to our 5th stock in Dell Technologies with a symbol of DELL. I know you're scratching your head like Dell is kind of old news, right? That's an antiquated view of what they're really up to these days. They're not just a PC maker anymore. Did you know they actually did 64 million in AI server orders last year alone? 64 billion, right? That's right. In fact, Dell is now the largest AI server manufacturer in the world, shipping their rack-scale GPU systems as fast as they can produce them. Their financials reflect this transition, including 118% earnings growth the past 3 years. Now, it's worth backing up and taking a moment to understand how Dell makes its money. They assemble and sell the servers. NVIDIA supplies the chips inside them. That means Dell operates on thin profit margins, around 5.2%, because the most valuable component in the box belongs to somebody else. Dell scores a B overall, which stands for a buy in our system, ranking the top 7% of all stocks we track. This stems from a wide array of strong fundamental scores, including top 29% for value, top 18% for financial strength, top 10% for growth, and top 7% for momentum, which says that other investors are catching on to the updated AI growth story for Dell. For investors who want AI infrastructure exposure without paying a bloated multiple, then the Zen Ratings data backs up the bullish long-term case for Dell at this time. This is exactly the kind of analysis I walk through live every Monday at 7 p.m. Eastern Time. Not just what I'm buying, but how I'm finding it so you can do the same. I also share my handpicked stock of the week, blending the power found in the Zen Ratings model with my greater than 40 years of investing experience. All this and more is part of our live training session this coming Monday at 7 p.m. Eastern. It's totally free. Just sign up at wallstreet.com/live. You'll also find a link in the description or scan the QR code on your screen. We're talking about Micron Technology, the symbol of MU, and here's what most of the coverage of the AI build-out is missing. NVIDIA's GPUs generate all the headlines, but those chips cannot operate at full capacity without high bandwidth memory stacked directly on top of them. Without the high bandwidth memory, right, HBM, the processor can't move data fast enough to run AI workloads at scale. There are only 3 companies on the planet who can do this, and we're talking about SK Hynix, Samsung, and yes, Micron, and that is the only one of the companies based in the United States. Now, the financials reflect that strong positioning with gross margins well above industry average and eye-popping 400% earnings growth this past year. Wall Street analysts have certainly taken notice with 17 strong buy recommendations. Now, the average target price implies about 40% upside in the year ahead, but the street high target suggests potential upside of more than 65%. This is coming from Cantor Fitzgerald's CJ Muse, who ranks in the top 2% of analysts based on his actual stock picking performance, meaning he definitely knows what he's talking about. Now, when it comes to the Zen Ratings, Micron carries the highest overall score of any stocks on our list today. Value, growth, financial zone, and momentum all score in the top 10% of the stocks we track. The most amazing part is that it's still considered a value stock even after the impressive run-up in shares. This shows up in the ultra-low 0.39 PEG ratio and the fact that it's trading at only 6.3 times forward earnings, insanely low for a company growing this fast. The one red flag here is safety, where it scores a D grade. Now, Micron carries a beta of 1.78, meaning it moves significantly more than the broader market, but that's in both directions, right? That works in our favor when the market's going up, works against us when the market's going down. That may be a concern for traders, but not for long-term investors, right? But thanks to AI, Micron is enjoying a super cycle demand for high bandwidth memory. And again, Micron is the only American manufacturer which looks to become all the more significant over time as the nation seeks to secure this vital supply chain. And full disclosure, I added Micron to my Zen investor portfolio back in December of 2025. The reason is simple. The fundamentals support holding for even more growth ahead. Now, it's time for you to sound out. Which of these 6 picks do you find the most attractive and why? Or perhaps you want to point out ones that you disagree with. Please don't be shy. Just share all your feedback in the comments section below. If you've liked learning about these potential long-term holdings, then I suggest you continue your education with my video featuring 10 stocks I believe investors will wish they owned a decade from now. Check it out.